Good morning. This is Larry McMillan with a stock market update on Monday, December 11th. So the market continues to plow ahead. It traded at a new intraday and a closing high for 2023 on Friday, and it's a little bit higher again this morning. So that's all positive. The next target on the upside would be 46.40, which were the highs of March 2022. And then if that is exceeded, then you're looking at the all-time highs around 4,800 from January 2022. So since we're in a seasonally bullish period here leading up to the end of the year and even slightly into the new year, that's all a positive factor there as well. There are overbought conditions, as you might expect, since we've had a pretty strong advance since the end of October. But we don't really have any new sell signals yet. Let's just review the various indicators. The S&P chart, as I said, is positive because it continues to break out to new highs. It has a lot of exposure on the downside. A rally failure could see us drifting back towards 4,400, but I don't think we're going below that, at least not anytime soon. Meanwhile, the equity-only put-call ratios remain on buy signals that continue to drop. There was a little question about the weighted ratio last week. That seems to have been resolved in a bullish manner. So those are buy signals for the stock market. The breadth of the market has been decent enough to keep our breadth oscillators on buy signals. And so that's another positive as well. They're in modestly overbought territory. New highs versus new lows has continued to be a very strong indicator here in the last couple of weeks, and that's a relatively new buy signal that's still in place there as well. So, really not seeing much in the way of internal deterioration at this point. VIX is trading down around 1213. That's a very low level, but just because it's low only means that the market is overbought. It does not a sell signal. That is not a sell signal in and of itself. It would only be a sell signal if VIX started to jump higher from here by 3 points or more. And finally, the construct of volatility derivatives, that remains bullish for stocks as well. So overall, things look pretty smooth heading towards the end of the year. There can always be a problem. Of course, this week we have the FOMC meeting as well as a CPI. But, the survey of economists and things is not expecting anything really dramatic from that front, not like we had in 2018, for example, where the Fed raised rates and the market took it very poorly. But you never know. Things can happen. So we remain, though, with our core bullish position, and we will trade other signals around that. At this point, we don't have any new sell signals, though. We just have the latest new highs versus new lows was a buy signal. Meanwhile, have a great week trading and take a look at our new website. I think you might find some things there that you like.